Hello everyone. In this particular problem set, what I want to do is to start showing you how journal entries relate to the accounting equation. I haven't really talked about the accounting equation before, so let me give you a little bit of information about that. Basically, the accounting equation is assets equal liabilities plus stockholder equity. And if you notice, the particular financial statement that these are related to, these classifications, are related to the balance sheet. So this all relates to how this shows up on a balance sheet. As I go through these examples, I will show you what we're doing here. And a lot of times, accounting homework may ask you to do your journal entries in relationship to this accounting equation. So I wanted to show you how to do it and walk through the logic with you. You can also find this template that I'm working on at corebridge.com. It is a download there. So if you click on the corebridge.com in the description below, you'll go right directly to the downloads page. What you want to look for is this journal entries and accounting equation Excel workbook. And so it'll look like this, and it will be blank, because my best advice to anyone trying to learn accounting is I'm giving you all the logic in a video, and you need to practice this on your own. You can always come back to the video and refresh your memory about how something is working, but the more you work it yourself and you know that you know the logic, then you are actually learning accounting. So let's start with example A, where a stockholder invests $40,000 into the business. So based on other videos that I have done, you know that we have to think about, okay, so what accounts are we using? Now the accounts are given to you in this problem because we have cash, supplies, property, plant, and equipment. That's what PP&E stands for. We have accounts payable, notes payable, and contributed capital. So in this particular situation, we have received money. We have received cash, and we've received more cash, right? We're increasing our cash. So $40,000 goes here. Now we also have some contributed capital, some equity that's been put into the organization because this stockholder has bought some stocks, okay? So we also have an increase in our contributed capital. Now one of the things I want to emphasize is that a lot of times when you're looking at this type of homework, what will happen is sometimes there will be pluses and minuses, and all that means is that the account is increasing or the account is decreasing. That's all that the plus and minus mean. So if you try to think of it in terms of math, you might get yourself confused. And if you have any questions about that, I encourage you to leave comments below or leave your questions below. I will help you with that. So now we have our first letter A done. Now our example B, we have borrowed $12,000 from the bank. Okay, we've gotten more cash again. So we have an increase of cash. And we have a notes payable. We have to repay that to the bank. So our notes payable has increased as well. So notice down at the bottom, okay, each time I do some sort of a transaction up at the top, it keeps a total for me for what the account has in it as far as a balance down below. Then my accounting equation is keeping track of does my assets actually equal my liabilities plus stockholder equity? And so far, I'm doing okay. This is good. Now we go to C. C says we have acquired $25,000 for a delivery truck. We've invested in a delivery truck, and we have purchased $10,000 of office equipment. Therefore, the assumption here, because it hasn't told us that we've done this on account, it hasn't told us that we're paying it over time. So the assumption we have to make is that we've used cash. So we've used cash of $35,000. So now we're reducing our cash. And we also have property, plant, and equipment. We have all of this stuff that we have just bought, and we need to show that as another asset. So we've increased our assets of $35,000. All right. Problem D, we have purchased $1,000 worth of office supplies on credit. So we haven't paid for it yet. We haven't used any cash at all. We're paying it on credit. We're paying it over time. But we do have supplies, and we have more supplies. So that is an increase to our supplies account. And since we're paying on time, we have a liability. We have to pay that in the form of accounts payable. And our accounts payable balance has increased by 1,000 because we have more accounts payable. And then finally, we have a client who signed a first contract for website design for $8,000. Now, this particular transaction will have no journal entry associated with it. Anytime a client signs a contract, or if a company signs a purchase order, either way, none of those actually creates a journal entry of any kind. It has no financial impact, because at some point in time, that client could say, oh, because of whatever reasons, I want to cancel that contract, or a company can cancel a purchase order. So no transactions are transpiring for that particular example. So this is all we do with this problem set. And as you can see, all of my accounts have a balance in them of certain amounts of money. And then my accounting equation balances. So all of my assets equal $53,000. And my total liabilities and stockholder equity also equal $53,000. So my journal entries balance, which is a good thing, that's the important part of accounting, as well as my accounting equation balances. So again, leave questions. If you have any questions, if you have any problems, please leave those comments below. And absolutely go out, download this template, play with it yourself, keep practicing, and the more you practice, I promise you, the more that you will understand. And I'll talk to you soon on another video. Thank you.